let's start with finance. Now, what is finance? Finance is basically the allocation of resources in a equitable and just way to boost your shareholders' wealth and also your owner's wealth, which is linked to the shareholders' wealth. Um, because a business exists for the profit maximization principle, so it must maximize the profit of its shareholders because they are the ones who invest money in you in the company, which are also known as promoters. The promoters are basically float the idea and invest the money required to start a business. So some return must be provided to compensate for the risk and for the amount they've invested in the company. So that's why we need to study finance, because we need to know how to maximize the profit potential. Now, finance is not only used for people who are directly working in the finance sector, or they are basically in the stock markets, or they are dealing in wealth management products like mutual funds, like debt instrument. It is also necessary for people who are working in a non-financial sector who may or may not have a finance background, because it helps in boosting their personal wealth and personal finance, which is so important in day-to-day life. As we all know, Corona has been a big disruptor in personal wealth. So, learning finance helps you in understanding what works in the financial sector, what works, what are the terms you should be aware of. Now, I'm not going to waste any more time. Now, I'm going to talk the basics of finance. Now, let's say we get to the F and I of finance. Today, in this video, I will talk about only the F and I of finance. The other the other letters will be described in later videos, which will be coming very soon. So in the F part is fixed, F for fixed and I for investment. Now, simply put, it looks very simple, fixed investment. But what I'm going to talk about is basically assets. If you have seen the balance sheet, there's two sides to the balance sheet. One is the liability side, which is on the left, and the asset side, which is on the right. Now, what fixed means is this is the necessary or the basic investment that every company does or has to do to sustain a business, especially if you're in manufacturing. Even if you're in the service, you need to buy some equipment or buy some service related equipment, so that you can run or start your business. Now, these are called fixed assets. Fixed assets have a huge capability to help you earn profit, like machinery, like it's a lathe machine in a factory, or it could be a basic equipment for your startup. Like if you have a if you're looking to run a vlog, you need a basic camera, or you need a tripod, or you need maybe a good projector at times. So these are the basics, fixed assets that are required to run your business. Now these are generally financed through loans, long-term loans, uh, which are taken from banks, financial institution. It could be a debenture as well, which is basically a form of debt, uh, where you issue debentures to get some money, and then you have to pay it back in form of interest. So these are basically a part of debt, part of long-term loans and liabilities. So now what is the next part is the investment. Now the investment in these big assets require a lot of risk, because you are investing crores of rupees in that, which will give you returns over a period of time. Because let's say if you invest some money in any fixed asset, will take time to generate profit. It will not give you profits from the next day. So that's why they call fixed assets. Now, fixed assets are supposed to give profit. Now, profits can be in the form of cash or reserves. Now, the reserve part is basically a part of your shareholders' equity or owner's equity, which is part of the liability side. So it is it is added to the reserve as surplus, and also some part of it is given as dividend. So the dividend is basically expense of the business. It is paid to the shareholders as percentage of the profit. The retained earnings are part of the reserves and surplus. So these are the basic facets of finance, and also the main activities that the business does is basically three activities. Uh, the first one is operating, the second one is financing, and the third one, which is interlinked to the financing activity, is investing. Hello, digital learners. My name is Mohit Chaudhary. The world of finance is ever growing with new possibilities and creative ideas. Today, I'm going to make sense of what happens in the financial world. First of all, let's discuss the three main things that companies work on in the financial world. There are mainly three activities as outlined in the cash flow statement, which are financing, investing, and operating activity. This is called the FIO framework. Now, these are three basic activities that every organization needs to do. Under operating, we have the cash that comes from operations. So every firm has daily operating activities like paying of salaries, paying of bills, paying of rent, wages, and these are important for day-to-day activities and for overall running of the organization, as the organization cannot function without this. Now, the next that we come up to is investing. Now, investing by the word is related to investment, which means that a company has to work on investment in big assets for which it needs capital. So whatever it earns through the operations, which is the net profit, and which also includes other non-cash expenses like depreciation, like interest expenses and other non-cash expenses that must be added to the cash flow, is used for purchasing assets which are used for long-term use. This is better known as fixed assets, which I'll be coming to later in the next video. So this activity is mainly used for expansion purpose. For example, if a company wants to increase its profit by 4 times in, let's say, next 5 years, it will invest money in machinery, in plant, in R&D activities, which are very critical for making of any product or service. So that expenditure will be shown as an asset in the balance sheet. So this is called investing activity. Now coming to the last activity, which is basically uh, used in purchase of fixed assets. It's the financing activity. Now, financing activity is basically helps in financing of the fixed assets that are being purchased. It helps in financing the fixed assets that are purchased by the firm. Now, financing can be done two ways. One is equity and other is debt. So, equity is basically the amount invested by shareholders in the firm to get a return. Basically, equity shareholders and preference shareholders are the two classes of shareholders. So, equity shareholders invest money in the company to get some return or get some dividend, which is capital appreciation or dividend. Dividend is basically a portion or the percentage of the profits that a company earns, and the other part is retained earnings. So these are basically the ways in which a company can finance its expansion.